Coming up in this show, Arby brings you a sample of Future Speak, a member video, and he looks at the cycle analysis of wheat, which is negative, and a short side trade setting up. I'm going to bring you analysis of Google. This is my anecdotal commentary, and it's a very negative analysis, and I think you're going to find it incredibly interesting. And this is the last week of our Give the Gift askSlim special, a holiday special that brings you non-recurring memberships at the lowest prices of the year with huge discounts. And we're going to send you back an Amazon gift card for doing so. And I'm going to bring you our stock market analysis, an intermediate view of SPY. Where's this big drop going to stop? And my projections for the next 1 to 3 months.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at might happen in coming weeks. And hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market gained sharply early last week as investors anticipated better inflation numbers and a Fed that was close to a pause. And after solid gains on Monday, Tuesday morning, the index futures rocketed to the upside as the headline CPI and core came in lower than estimates. The ES futures exploded to the upside on that news as the shorts scrambled, and they were up over 150 points pre-market. What a move. But then they gave up most of the gains throughout the day and closed up about 30 points, pretty modest. Wednesday was Fed day, and they tried the upside again early in the day, with the S&Ps getting up about 35 points ahead of the policy statement. And then when it came out at 2 o'clock Eastern Time, well, the Fed raised rates a half a point as expected, but after that, the commentary was all quite hawkish. The market reversed to the downside, finished quite lower, and then fell right through Thursday, down over 120 points at its worst level on Thursday, and then it's continued down here on Friday. Also helping bring sellers were the ECB and the Bank of England. They raised also by a half a point, and that's happening while the UK is already in recession. And the ECB, Lagarde, who most of you know I have a very low opinion of, along with other central bankers, well, she was very hawkish. You got to ask the question, where was she and the other central bankers when inflation was under control and they had insane zero interest rate policies and negative interest rate policies? Well, my opinion, just to repeat that, these central bankers, well, they have various levels of ineptness. Friday, the selling continued in here as the market just can't seem to get any footing as investors are digesting what appears to be a very rough road ahead. This week's retail sales figures were again very weak, and that kind of shows you that inflation is taking a big bite out of discretionary spending. And between that and this, what appears to be a very rough road ahead, according to the Fed and other central banks that are saying 23 is likely to be slow and contracting in some world economies. And at the same time, the central bank will continue to be very stingy, something investors have not had to deal with, well, at least 13 years. And many younger participants, they've never seen anything like this. They're so used to the free money policies that we've been under that have lifted markets for so long and created these extremely bloated market valuations Well, that's now clearly all changed. So here on Friday, as the market is down about 50 points early, it hit our targets for the week. These were really targets that we had that we thought we would see by about Christmas time, and they came a little bit earlier than expected. Still, there is likely more trouble ahead. I'll tell you more about that in a second. For the past several months, we've projected that the bear market was not over, though looking for bounces which have proven to be well timed, and then more failures. And we're still looking for another bounce to the upside in January. What caught my eye this week were a couple of articles, and one of them from Bill Ackman, who I have a ton of respect for. I mean, he's really good. And he said a couple things about the Fed that I thought were spot on. He said, the Fed's 2% inflation target is unattainable without some very severe economic pain, and they will not meet their goals without a deep job destroying recession. I agree with that, and I've been saying that. And so really does Powell, but he won't say that. I mean, he wants to just always put an optimistic spin on everything, and maybe that is his job or the job of other central bank heads. But you can tell by what he's saying that he's going to allow a recession, and that is coming. The second article, which I found to be very interesting, of course, because it's so much in line with what I've been saying, was in Yahoo Finance. It's Goldman Sachs equity strategy team, and they offered up an opinion with a chart that has two tracks for the stock market. And they essentially are bad and very bad. Let's take a look here as we look at these charts, and you can see this is a very, very interesting chart for me because it so follows what I have been saying here for so long. And that is that, there are two scenarios. One of them, as you could see, their scenario here is a test of that low somewhere around 3,500 is what I have it. They say 3,600, as you can see right there. Or a hard landing, which gives you a trough down at 3,150. They're using even my language. And we've looked at somewhere under 3,300, maybe 3,200 on the downside here. They are projecting on the soft landing scenario that it gets up somewhere around year end to about 4,000, and the hard landing scenario somewhere around year end up to about 3,750. This is almost exactly the scenario that we have been talking about for a lot of months. So I'll give them credit for having their own thought processes, but at the same time, I was way, way ahead of them looking at this, as we have suggested all along that the stock market was likely to be moving to the downside in some significant way out into the late winter or springtime. So I think either scenario that they share in very much in line with mine are very plausible. I think it's very low odds that the low is already in place. And the best case is a test of that 3,500 low in the S&P 500. Do not miss our year-end show. I'm going to bring you big picture analysis that has some very important comparisons, historical comparisons, and a reason to believe that there are lots of years out there with lots of trouble going forward. Don't miss that show. For the week, the stock market, after a big upside failure, the major indexes are down right now about 2 to 2.5%. The S&P 500 is down almost 300 points off of its high, so it's quite a reversal that it had in there off of that panic buying that came after the CPI news came out. Bonds, well, I'm in my live show, which we did last Tuesday, askSlim Live, and we invited our whole membership there, so it was a huge crowd. I talked about what I thought about the Fed and said that the Fed is not likely to say anything that will lower interest rates further. They already have the bond market defeating their inflationary fight, as the 10-year yields fell from 4.4% to 3.4%. Well, that's not what they want to see happen. So there was no way they were going to be anything but more hawkish. And I said that last Tuesday, and I think it panned out to be quite true. The bond market is still quite firm, as it had a sizable rally, but it's coming to the time when we think 10-year yields are about to bottom. For the week, the 30s gained about 1 point, and 10-year yields fell by about 6 basis points. But we think that very shortly the yield bottom will be in place, and the bond market will be falling again, and maybe sharply again. The gold and silver market, they were down small after some big downside reversals. They were gaining as the stock market and everything was popping on the CPI, but then they ended up with some small losses, reversing those gains. The dollar, small down also. There's an important low pending. So that all makes sense when you look at correlations. Interest rates bottoming, and when interest rates bottom here, that will bring some appeal to the US dollar, so the dollar will be going up. That also will likely bring some pullbacks in the gold market. And I think that also, of course, that aligns with the stock market. Oil market already is discounting a recession, and we think there is still more big risk. Now, it had a rebound this week of about, here at midday, that we're talking about everything on here. It's gained about $2.25 after a huge downswing last week. And we still think the downside risk is below 65, maybe 62. Out in coming months. Don't forget, you can get all of our analysis on all of the futures every single Wednesday. Arvi does just an amazing job in the Future Speak show, and you see weekly and daily analysis. This is for level 2, 3, and 4 members, so do become a member and take advantage of our just great Give the Gift show. Again, here is that look at the unbelievable comparison, very much in line with what we have shown as a likelihood. This pullback that's likely coming into the springtime or late winter, and then a rebound that does not make new highs. If you want to see everything that we do, well, this is your opportunity. Go to askSlim.com and explore what you see there. Make sure you subscribe, share, follow everything we do. If you're new, get acquainted by becoming a free member. On YouTube, subscribe to the channel, click the notification bell, and give us a thumbs up if you like the video. That helps us. On Twitter, follow us at askSlim. And any questions that you may have on our memberships or anything about our huge offerings of education and analysis, or our Give the Gift special that we have going on right now, you can write to Matt at askSlim.com. This is a preview of our Future Speak show, where Arvi does analysis on 24 different futures contracts with weekly and daily analysis and our projections and annotations and everything. And Arvi is just brilliant at this. So make sure that you watch this little sneak peek, this sample that we're giving you, where he shares the analysis of wheat. And that wheat analysis is very good. It's been negative and it remains negative, but you're going to see there's a potential trade setup coming. Take a look at that. Show them this, Arvi.
If we go ahead and look at the wheat market, you'll see a very nasty left-hand translation here with a 1-week rally and then a very strong sell-off that still is not likely done, as that next low here in wheat is only due around the end of January as well. Now let's shift over to the daily. So we have a firmly bearish ribbon here with all three MAs pointed down. We have a bearish PO, so short-term bias clearly is negative. We are watching for a rally into the zone from 776 to 811 or so. Rallies into that zone are likely to fail, and we'll be looking for this to turn back down and retest this old 161.8 right here at 719.75 or so. So that's what we are watching for. A trade idea is a little pop back to the upside to not go anywhere, fail at that falling 21 EMA right there, which is in red, and then turn back down. And this next daily low is due in mid-January. Okay, so that's the overall picture here in wheat.
Great work on that. This, I think, is some very interesting analysis in Alphabet. Of course, that is Google. I think there's more trouble ahead. I'm going to give you some anecdotal comments in here as we use YouTube, which is, of course, part of Google, by posting several times a week. Of course, we get benefit from that because we get paid for ads. And also, it is an excellent place to do our marketing. So we're very faithful to posting in YouTube. Our number of subscribers in YouTube over the past year has soared. We've gotten some great exposure from this, and of course, our following has grown is because we've had a great year in analysis, and our monthly views are up over 40%. So it's been just a great year for us on YouTube. Our monthly ad revenues, however, have plunged. In fact, from their peak level, they're down about 50%. So the amount of money we get paid as a regular check from Google has really come down, and it's been disappointing. Google stock has been very reflective of something that's going on because, of course, as the tech stocks have pulled back, the FANG stocks have pulled back, Google's been part of that. But really, based on what we're seeing and how we get paid from Google, from YouTube, companies must be pulling back in a huge way in the amount of advertising they're doing. Because if that weren't the case, we would be getting paid even more than we were a year ago. To me, this seems like recessionary evidence, and even more trouble for Google's earnings ahead. And we've been projecting Google as negative and are still looking for it to go further on the downside. I want to give you a quick look at our analysis as I look at cycle analysis on the Google chart for weekly and daily. And for those of you that are brand new to this style of analysis, please do go to our website at askSlim.com and you can learn about how we do this analysis by clicking on the Cycle Analysis Workshop tab. And there's a very informative video in there which tells you about cycle analysis. So what we're looking at here on the bottom are cycle brackets, which are essentially the ideal cycles. If there was a rhythm where they went up half the way and then down half the way, it would look like this ideally. And there is a half cycle in there, a minor cycle that you can see. And you can see that forming right in here, that half cycle there, and the half cycle right in here, and a half cycle here, which ran a little long, and another one going on right here. This is the dominant cycle, and these cycle lines up here show you the actual cycle as they've formed. And these vertical dotted lines, as you see, are where the actual lows came. And you can see this low over here was a little bit earlier than ideal. This was very close. This one was a little bit later. This one was spot on. And right over here where these two blue vertical lines are, where we expect the low to come in this Google cycle that we're in right now. Now, a couple other important things to show you is that when a cycle rallies as it's supposed to after making a good positive cycle like this, you'd expect it to make a higher high, which it did. Then when it breaks underneath that key cycle low, it's negative, and it says that the decline will likely come through the bottom of the cycle, which you can see it did right over here. This was a similar cycle because it had a breakdown over here and then points to a decline through the bottom of the cycle right over here. Now it's worth noting that on the daily chart in the third week of February is when this low synchronizes on the weekly and daily chart. I'll show you that in a moment. Furthermore, there are fib extensions down over here, which point to the bottom, which right over here was at around 83.5, and potentially coming down over here to about 73.5. This is a very reasonable target for the downside into February at 73.5. Now you can see what happened in here as this broke down, and then you got a rally. It formed the bear flag, and it came up right into resistance and rejected perfectly at the right spot, and it is now moving down again as the stock market is under a lot of pressure after the Fed announcement this week. So you can see in here that Google is still in a lot of trouble and very likely to be moving down into this period in late February. Now remember that our stock market analysis is similar. We're looking for the lows for the stock market to come sometime out in the February-March period. So this is somewhat in line with that. So this is a very negative look with a target over here at around 73.5 sometime out in February. Let's switch to the daily chart. And you can see in here the cyclical patterns are beautiful, really. As you could see where this low came, that synchronized well with where the low came in Google on the weekly chart. And then you had the rally into the resistance area, as you can see right in here, and then turn down. Also, what we have on here is the slim ribbon and the slim ribbon PO, which is on the bottom. And when the slim ribbon PO is green, then you're in a rising phase on the slim ribbon, as you can see. And when it's red, you are in a declining phase when the configuration of the slim ribbon is negative. When you get these red arrows, it tells you that there are likely resumptions on the downside coming, as you can see. When it's blue, it's neutral. You're not getting a lot of information when that happens. And right now, it's red, as you can see, and it's having a hard time even picking up because Google is so weak. So right over here, you could see that there is a low that's due coming out towards the end of the year. Now, remember our stock market analysis, which if you're watching here in the Market Week show, you'll be able to see that in later on in the show, or you'll be able to see it on the clip of that on YouTube. And this support here is at around 87. So we're kind of looking for 87 here in the next week, week and a half. And then another rally that fails because, as we said, the lows that are expected, and if I highlight this cycle, come out to the third week of February, which is what syncs up with that weekly trough that I showed you on the weekly chart. And that all gives us a picture, and I'm going to show you the side-by-side in here, of a negative conditions in here, whereas the reversal scout, which is right here, is now turning down again and failing as it did in that resistance area there and pointing to this daily cycle here, declining out to February towards maybe the beginning of March. And the same thing over here that we're showing on the weekly with that target that we show you at around 73.5, right down over here on the weekly chart. So this is a very, very negative look here at Google, and very much in line with what we see as far as the revenues that we're receiving from YouTube. And just so that you know, Google's ad revenues as a percentage of their overall earnings is about 80%. That's a bad picture for Google, a bad picture for what we see going on in the country as far as business as they pull back in their advertising. I think that's pretty significant, and I hope you found this to be very valuable. All right, the stock market 1 to 3 month view is coming, but first, this is our final week for the Give the Gift of askSlim. Don't miss this great opportunity. Watch this. This is the final week of our holiday special, Give the Gift of askSlim for 2022. These are the best prices of the year because when you subscribe to this 3-month non-recurring membership, we're going to send you back a bonus gift of an Amazon gift card, depending on which level that you subscribe to. Give the gift to someone you know who loves trading or technical analysis, or give the gift to yourself. And it's great for first-time members. Or use this special to try a higher level here at askSlim. All you have to do is go to the top of the askSlim.com website and click the Learn More button and take advantage. Only 7 days left to this, so do that now. Any questions, write to Matt at askSlim.com. Okay, stock market 1 to 3 month analysis. We're going to look at the SPY. Now you can get our full analysis on weekly and daily analysis and our indicators by becoming a level 1, 2, 3, or 4 member, and you will get the stock index report daily. Matt does an amazing job on this every single day, and he shares all of our charts, all of our indicators, and so much more, key levels, commentary, all of that. I mean, it's just amazing. And if you just want to become a level 1 member to get this because you're interested in the stock indexes, you will see that on the SPX, NDX, RUT, and you can subscribe for $45 for 3 months. How can you not do that if you're interested in the stock market? To start out this section, I'm just going to share about a 1-minute recording from last week. So we see a failure coming in here either today on Friday or into Monday or Tuesday, and then the market trying to rally again. But because of this formation, we are looking for a further decline, which comes out to the end of the year, where these cycles come down and nest. You can see in here these blue vertical lines that the low projects out to 1227 to around 1/4, January 4th, and that means that there is only a very small likelihood that any rally will be able to come that holds, and most likely declines will come. We had said last week that our projection on the SPY was around 386. That is the top of this support zone right over here, which is at 3865 on the SPX. So it's 386 or 3865. And this, a middle of that right there, is at about 3792. Either of these could be where this declines to towards the end of the year. So that was what we said last week. Now let's look at this week's intermediate analysis. All right, so let's take a look here at the stock market. We're going to look at SPY. So this is an SPY chart without our analysis on it. It has no annotations, no cycle analysis, anything. It has on there our 2 different moving averages, where it looks at a 13-week and 34-week moving average. And right over here is our reversal scout, which is a great indicator for cycle, picking cycle bottoms and tops, and also for understanding the direction. You can see in here that the momentum, directional momentum conditions are still positive here in the stock market. So now I want to switch over from this blank to take it to our weekly analysis that has everything on there. And you can see how much that changes. And for those of you that are brand new, you're going to say, what is that? Those of you that understand our analysis would say, how could I ever live without this? Make sure that you go to the askSlim.com site and you can see right in here how to learn about cycle analysis. Just go to the workshop tab and we've got a great video on there for free for you to watch. So what we're looking at here is the S&P 500. I'll give you just a little bit of the of what we have in here. Cycle brackets on the bottom for those of you that are new. We have some out of phase cycles with a larger cycle right in here. This is the dominant cycle we were looking at. This is the minor cycle right in here. And you can see that this larger cycle right over here bottomed pretty much on line there. It bottomed with these other cycles right over here, and then bottomed over here on this low versus this low. There were 2 different lows that were pretty close right there. So this is a very valid larger cycle here, and this was the dominant we were looking at before, and you can see both of them come into play right in here. So the timing for the next coming low is somewhere out over here at the very beginning of April, or I'm just duplicating that and bringing it right over here, the sometime around the near the end of February. So end of February through sometime in April is where this next trough is due. This was the everything bubble, the Fed blowing everything up. This is Great Reset Phase 1. Some people have written to me, what does this mean? Well, I think that this whole decline in here is just Phase 1 of the Great Reset of 13 years of central bank idiocy that blew everything up, and now they have to correct that, and that will go on for many years to come. And there will be some bull markets in the middle, and I'll show you that if you watch our big picture analysis, the year-end show coming up in just a couple of weeks. So do make sure that you remind yourself to watch that. So let's just look at these last cycles right in here, and you can see where we are. Now, we had talked about, in a brief little video that you will see at the very beginning of this little section in here, you will see that there was a analysis that showed that there would be a break somewhere down to around 386. So I'm going to insert that little clip from last week in here. Then you will see right there that it's already heading down over here to about 379 is the next level, as the stock market is quite weak. So the likelihood of further declines is still in hand right over here. Now, we had talked about that the low would come sometime around maybe just after Christmas and then get another likely upside move beginning. And we're picturing that getting up here towards that 41, right over there, 415 or 4150 on the S&P 500. The deeper this gets, the lower the likelihood of that much of a rally coming out there into January. But right now, it still looks like it's quite plausible. So the break came over here from the resistance. It tried to get up panicked on that panicky upside move through this VTL, valid trend line, which you can learn about in our cycle analysis workshop, but then failed and came back down into support. So this is following our scenario very closely, and this is the minor cycle bottom that comes in here sometime just before or after Christmas and then begins to move up again. So that's this next picture that we have over here of a upward forecast with getting another rally. Because of the current sizable decline that we're seeing in here right now, it does give me wonder whether or not it can make it up here to 4150 or 415 on the SPY, depending on how much further this gets down, as I say. So this followed the pattern almost spot on, as we showed in that little clip at the beginning of this segment. And now it's set up for further decline out over here into coming towards Christmas, and then likely beginning the rebound. Short-term analysis has shown that it was likely to potentially go out as far as close to New Year's in this decline, but now I'm getting a sense based on this capitulation of magnitude, it might bottom a little bit sooner than that, and then actually be able to give you an upside move between Christmas and New Year's, which is pretty common in positive seasonality. So in this 1 to 3 month view, it essentially says complete this downside here in the next approximately week, then begin to move up again, testing the high right over here, which was at 410, potentially 415, and then moving down in this yellow zone, this period of risk, which points to January through March for a decline. It's important that you see that this node here, VIX intermediate trough, in other words, the low in the VIX, is likely to come mid-January to late January, and it aligns with this peak that we're looking at right over here in SPY. So that's why we think that there'll be another rally in here, but then a decline. Now, in the beginning of the show, if you didn't watch it and you're just watching a clip here on YouTube, I showed a chart that was put out by Goldman Sachs that talked about where the market is likely to fall to. And the soft landing scenario was testing this low down over here, right around 350, 3,500 on the S&P, with a potential, they say, of getting down to 3,150. We said 3,200 over here, or 320 on the SPY, and that still is the scenario. So over the next 3 months, we expect a bottom here, another attempted rally, and then getting into a very ugly period, potential for a very big decline here out in this mid-January through March or early April period. That has been what our analysis is. This blue box right over here is the fib extension zone. The top of that right over here is at 344. To me, that's really a best case. The bottom of it here, which is a 100% fib extension, is 326. And then this major support right over there, 61.8%, is in the area of 320. That would put us in our projection of 30 to 35% down in the stock market for this bear market leg that we're in right now. And I think that's what we're looking at over the next 1 to 3 months. I hope you found that to be very, very valuable. Please do make sure that you follow us on YouTube, and I know a lot of you are watching it here, so make sure that you become a YouTube subscriber. Also, don't miss this final week of our holiday special, Give the Gift of askSlim. You get a bonus gift. In other words, if you sign up for this non-recurring membership, we're going to send you back a gift card from Amazon and really cut your costs further. So this is the lowest prices of the year. And if you like what we do, well, this is going to expire. So you're going to have to resubscribe at the end of that 3 months. So you won't be charged again. Give the gift to someone you know who loves trading or technical analysis, or give the gift to yourself. And it's great for first-time members or people that want to upgrade from our free or level 1 membership. So I think that's great. To sign up, to get more info, click the Learn More button up at the top of the askSlim front page, askSlim.com. And if you have any questions, you can write to Matt at askSlim.com. This is the end of this show. I want to make sure that you do give us a thumbs up for this video. Make sure that you like it and subscribe on YouTube. And make sure you write to Matt at askSlim.com with any questions. I want you to be so careful. It is so crazy out there. And I'm always wishing you great trading.